Hello and welcome back to my YouTube channel, Richard Williams UPS, Asset Protector. That's what we do is we protect people's assets. Today I want to talk to you on this video simply about an IUL on Index Universal Life Insurance Policy. That policy is a policy basically like a glorified savings account. Basically what you do is you purchase the insurance policy and you overfund it, meaning that you put more money in than is required. Let's say you have a $100,000 policy and you want to save $500 per month, right? So that's $500 a month, $6,000 per year. Nobody's pretty much paying $6,000 per year for life insurance unless you are very, very old, mature in age, and have a lot of illnesses going on. Otherwise, you can get insurance at a much more equitable and reasonable price than $6,000 per year. But if you're putting $6,000 in a year, a portion of that money goes into the stock market and it goes to work for you while you're asleep around the clock. So once per year, then you'll get a percentage that is added, a percentage of interest that is added to the amount that you have put in or saved, okay? All right, so in an Index Universal Life Insurance, it does a few things, but three of the main things that it does that I want to talk about, and I've kind of started to pre-list those for time's sakes. It is designed for cash value. It's designed to make you money. That's the first and foremost reason that you want to be buying or purchasing an IUL policy, is to either make more money or to spend less money. The second reason would be for tax. The tax benefit that you will get from the Index Universal Life Insurance policy. So basically, there are no taxes. So if you needed to borrow money from your accumulation value, your cash value, then there is no taxes associated with that. We know that legally you cannot do that. But there are some other tax benefits that come with that as well. And also you have a death benefit, right? And the death benefit will be the money that once you pass away, you'll leave that money to a beneficiary, be it a spouse or a relative or an organization or what have you. But I just want you to think about it this way. If you have a car and the car keeps breaking down and can't get you to your destination, to where you need to be, what would you do? Will you fix the car? Will you trade it in and get another car? Or will you keep driving that same car that's not getting you to where you desire to be? The IUL is designed to help you create money today by saving, taking the action steps today, so that you will have access to that money should there become a need futuristically. Maybe you have a child that's going to college. Now it becomes a college fund. Or maybe you want to use that money when you retire. Maybe your kids are grown and now you want to use it in retirement. That's retirement income that can be paid to you for the rest of your life. Maybe you want to start a business. Whatever you want to use that money for, no one cares. It's not like you have to say, I want to buy a house or I am financially insolvent and so I need to use this money, whatever. If you want to go to Florida and make it rain in a nightclub or come to California and go hole hopping or go to the strip club, go make it rain. Who cares? It's your money. It's just like having money in the bank, except you cannot use a debit card. It would be the same as if it was a 401k or 457B or thrift plan, right? You would complete paperwork documentation, or you would do it most likely electronically, And then within 24 to 48 hours, 72 max, your money is in your bank account. How cool is that? So your money is there when you need it. You're making money, first of all. First of all, you're making money. Then your money is there when you need it the most. And you have a death benefit that you can leave to your family when you pass away. And you have tax benefits that you can use in life. So when we think about life insurance, we don't want to think about life insurance first because no one wants to think about their own demise, right? Even our parents, we don't want to think about our parents, but we have to have these tough discussions with them now. Ask them those questions because one day you won't be able to. It's going to be too late. And if you don't have your stuff lined up, who do you have to blame? If you're 40 years old, younger or older, doesn't matter. You're getting older each day. You're as young today as you'll ever be. So at what point do you begin to take stock and inventory of what you have? Look at the sight picture of what you would like to have and take massive action to get there. Well, if that's you, then I'm that person that's in between that can help to get your questions out in the open, get them answered, and get you to understanding how you can take part in this. See, this is what, you remember that book was a childhood story called Robin Hood? Robin Hood robbed the rich and gave to the poor. Well, in this is the type of contract that you can get into. You're not robbing anybody. And you get to do this in an honest way. And both parties are winning. The insurance company are winning, and you, the client, are winning. Because the more money you put in this thing, the bigger it grows. And it compounds and compounds and compounds and it compounds. And one day, when you retire and you need that money, then you have a bigger pool to pour from. You start small with what you can afford and work your way up to where you want to be, right? So if you need $100,000 per year when you are 60 years old and retire, if that's the time you retire or you retire later and you need $100,000 per year, then how much money do you need to have if you plan to have that type of income for, on average, what the insurance company say 18 years. So basically, after most of us retire, about 18 years is our life span, okay? So that's something to think about when you're choosing things to put in your body, when you're choosing recreational activities. Think about it. It's a cost to it. But it's a cost factor to everything, but there's a cost to have this, and there's a cost to not having it. Let's say you already have one. If that's you, hey, 2 thumbs up. I'm happy for you. Congratulations to you. Pat on your shoulder. Pat on your shoulder for taking stock of your future self financially and making sure that you have the benefit of being able to pull from those resources when you become older. And then you don't have to worry about how you're going to make ends meet when you become older, sicker, probably have a diagnosis, need medication, and all those things that happens to us as we age. And this is not about me speaking death over you. It's about speaking life over you. It's not about me prophesying over you and saying what you're going to be and what you're not going to be. But I will say this. Every one of us will have a checkout time. Everything has a shelf life. I don't care if it's milk, egg, potatoes, or oatmeal, or human beings, cars, cell phones, it doesn't matter. Light bulbs, everything will pass away. And if you don't have a system in place before then, you're going to be in trouble. Everything is going to get older. Everything is going to age. And we can go back and forth all day long with how you feel about what I'm saying. But at the end of the day, when it matters the most, will you have this Box, check. And if you don't, when you check out, oh well, that's on you. My job is to tell you, my job is to teach you and show you a better way. Your job is to try to figure out how to understand it and take massive action. Because on the day you shut your eyes, most likely, I probably, unless I'm your agent, I won't know anything about it. And if you're not doing what you need to do for your family, that's your family. My job also is to make sure my family is covered. And that's exactly what I'm doing. It's just that a lot of people don't know about the Index Universal Life Insurance Policy. If you already have a life insurance policy and you've had it for 2, 3, 4, 5 years, right? At minimum of 2 years, and you don't like the growth of where that policy is going, then it's time to sit down with your agent and have some questions put on the table. You need to ask some questions. This is not doing what you said it would do. Not that none of us know what the market is going to do. So don't beat your agent up because it doesn't quite turn out that way. You know, it could go way up here, it could go way down here, right? So it just depends. Nobody knows what the market is going to do. But there are strategies that you can use to get there. So if you need that $100,000 of income per year, then there are strategies that we can help you to get there, to give you a picture where you are more likely than not to achieve that satisfaction that you want in your financial, as far as your financial goals are concerned. Hey, be sure to subscribe to this video, like and share this video with everybody. Meanwhile, take care of yourself and each other. I look forward to seeing you on my next video.